Our family, and we are live. Hmm. So today also for me is gonna be a tape reading session. Like again, for I'm anticipating this load to be. I'm anticipating this week to be pretty slow for me. I'm not looking to push a button whatsoever until maybe Thursday. Because one of the reasons is that it's because we're pretty much trading ahead of FOMC, and those days before it tends to either be low probability or just a high accumulation, high persistent liquidity run, and we might get a move, but I could care less because I just want to be part of low resistant liquidity run conditions. So as of now, when I'm looking at the charts, we can either have two, we can either 930 open high and then form a smart money reversal instead of a premium PDRA and then go lower, or we can just go lower and then I'll look to pretty much just tape read smart money reversal and all of that stuff. But personally, I will be just watching price action to see, pretty much just to keep myself in touch with the markets, if that makes sense. But as of now, it makes a lot more sense for price to just go higher, take some sort of internal buy sell liquidity, and then form smart money reversal to go lower. And what do we say about relatively equal lows? They tend to be made jagged. Smooth edges tend to be made jagged, so we have relatively equal lows. And right below here, there's a lot of generated sell liquidity. So it makes a lot of sense for 930 to open high, take some sort of buy sell liquidity, and then go lower. That's my anticipation. But again, price can do whatever it wants to do within the confines of the algorithm. And of course, like throughout the week, like long term for the weekly, I am like bullish. It just we're pretty close to the all-time highs. Buy sell liquidity, all-time highs. Here we go again. But pretty much see. So we see right below that social liquidity pool, we have the daily volume imbalance. That's good. That's a discount array. I don't like the green color. It looks weird, but it is what it is. Oh, you don't like the color? Bitch ass. Eee. Aniquilarme y al tenerme de frente no son tan hombre para tirarme, no, no. Me he visto infrarrojo sobre mi cuerpo colocado, yeah. Dispara, dispara. Yeah. So what do we see right here? We see 9:30. Well, no 9:30, but in here, purge of liquidity. We retraced a little bit, went one more time higher. Displacement. Why is this displacement? We have SIBI. We have this inversion. So me personally, I want price to stay below consequent encroachment of the inversion for value gap. That'll be ideal, right? That's what I would love to see. 932 open and maybe wick doing a little bit of damage above this midpoint of this inversion right here. And this is also an inversion suspension block, but let's just keep it as an IFEG, including both of the volume imbalances. But again, I would love 930 to stay right below here and then just spool and keep the majority of this gap open. So I'm anticipating this gap right up here to stay open. That'll be the ideal. Again, we are trading on high resistant liquidity round conditions, but let's see. And it makes more sense because we have this volume imbalance right here. You might want to tap into it for to give the opportunity to smart money to accumulate more long positions for all-time highs. I'll be back. Price might want to work inside of the yesterday opening range gap high. I mean, look, nah, man. This might be, nah, this is that's too much. Let me stick with the low hanging fruit. So, what am I looking for after these relatively equal lows? Consequent encroachment of the volume imbalance. We're having ES and YM just going higher. And NQ ended up opening lower. That's the first sign that you shouldn't even be touching the charts at all. We need to understand that ES, YM, and NQ, they're supposed to be moving in tandem with each other. When we have NQ going lower and ES and YM going higher, when they're supposed to be moving in the same direction, that is a clear sign that just just close the charts and go touch some grass, because that's a very indicative of a high resistant liquidity run. Now, is there once in a blue moon that they're not moving in tandem with each other and then we have the best nice run in the world? Sure, but I mean, that's the exception to the rules. Those things are going to happen, but most of the time, that is very indicative of high resistant liquidity run conditions. Hence, of why I am tape reading. So, and then we have the random level that I outlined before market open. Completely random, by the way. Nothing to do with the algorithm. It just happened to buyers and sellers agree with the same levels that I was outlining, by the way. So again, smooth edges tend to be made jagged. There we go. Now at this point, we are in an area where we could anticipate some sort of rejection like we have it right here. This was low hanging fruit, those relatively equal lows. Now, in here is just be patient, like nothing to form a trade based off, because we went into like, just look at like how how in the world how in the world you're telling me. So as of now, we took this sell liquidity pool, and now we are seeing NQ going higher, ES is going higher, we have YM also going higher. I could easily, after that liquidity pool getting taken, anticipate so if tape reading, so if we create a gap right here, I will definitely go long inside of the inversion. If we create a gap right here, we have all this generated by sell liquidity right above us. We trapped all those retail traders thinking that we're just gonna dump right away, and this gap will mean that we're gonna have displacement. But today's price action is all over the place. Down close candle. This is a bullish order block. I would have gone long, stop loss right below here. Targeting all this generated by sell liquidity pool. So stop loss right here, going long right here. And again, this ain't financial advice. If you, whoever's watching this, don't be taking a trade based on what I'm saying. But anticipating a run into all this generated buy side. That's a 75 handle move from the busy. If it goes there, that's a low hanging fruit. Low hanging fruit objective. Easy to trade with. No, we don't want to see this low get taken. It's better for this low not to get taken at all, because we already dig inside of the down close candle, and inside of this busy. So taking this low out becomes problematic, which just on a regular day, this would have been an institutional order flow entry drill, and then just like this is the move right here. But now we're seeing again going lower one more time, taking out this low out. Doesn't mean that it should probably have the chance to still go higher, but it would have been better not taking this low out. Now, so we have this total soup, right? Again, original stop loss is right here. Now, my stop loss is moved right here. If I would have been hypothetically on a trade, my stop loss is right here. There's like we already had the total soup, the manipulation. We are trapping all those traders right here below this low. Now it just has to if we're gonna go higher, it has to do it right now. And not have another move lower and then go higher. No, it has to do it right now if we're gonna go lower. The next candle or the very next candle. So now we haven't hit profit yet, but the risk went from this low to this low. How many handles is that? Less than 25 handles. Anticipating a 75 handle move. This is what I'm talking about. This is what I'm talking about, man. And getting to the point where if it was great, getting to the point where you're not afraid in quotation marks to just miss any move. It's like, oh my god, I believe we're gonna go from this point to this point right here. But look how hard it's like look how hard it's trying just to get from point A to point B. Like we should have like institution order flow 1, 2, 3 candle. Done. But now we went high, then we went low, total soup this low, went high, easy just moving right up here. Then we had a deep retracement instead of the uh, two consecutive down close candle, which makes a bullish order block. Staying below mean threshold, that's what I'm anticipating. That's the last line of defense. The moment we close below, it becomes problematic. The moment we close below mean threshold, it becomes problematic. But look how hard it's trying. I just staying there. So do you want to be part of moves like this where just you're sweating, praying that it goes to your target in a high resistant liquidity run? Or you just want to get into your trade and or because we have to understand mental capital, man. It's really important. Keeping yourself cool, calm, collected is super, super important. And just understanding that this will never stop working. There's always going to be an opportunity to take a trade. And I'm telling this to myself as well. It's like, and you want me to be completely honest, I want to get to the point where I'm able to trade high resistant liquidity run conditions with a clear mind. The reason I don't, and I'm deciding to tape read and see it for what it is, it's because I would have gone crazy. It's like 70 handles, easy target, take 3 to 4, 5 candles. And we're just edging that buys the liquidity pool. So I want to get to the point where I'm able to trade this with a clear mind and just be like, this is part of this is what I'm anticipating, and be malleable with and flexible with my stop loss and all of that stuff. So here's the second random target that I outlined before I went there. Of course, it has everything to do with buying and selling pressure. There's no algorithm controlling the market at all. And look at the rejection out of it. Oh my god, bro. So from here, from the inception right here, 70 handles, we had a stop loss of right here. Then the moment we total soup this low, there is no reason for price to go down here anymore because we already trapped all those traders. We rigged them apart. Retracement instead of the bullish order block, staying above mean threshold of it. We have wicks doing damage, but bodies telling the narrative, staying above mean threshold. All this generated by a liquidity pool right up here. And right above we have the SIBI. And here's that third random level if it gets hit. Now, you want me to be completely honest? If Uh, one tick. That's fine with me. I'm not anticipating price for I don't it could, but I'm not seeing I'm not feeling it. Like seeing price gaining all the way up here. What I'm feeling as of now is getting just maybe another run. But as of now, like we already had the two levels that I was anticipating to get taken out, which was the relatively equal lows and the buy sell liquidity pool. That's all I need. Now at this point, I'm mixed. I have no clear understanding of what price wants to do. And guess what? That's completely fine with me. I don't have to understand where price is gonna go 100% of the time. I mean, two times here, easy level. Then from here, easy level. That's all you need to make money, babe. Did I just say, babe? Oh my god, I'm losing my mind, bro. That's all you need to make money, bro. So let's see. Yeah, great reaction out of that volume imbalance. That's indicative of strength. Market maker bomb model. Okay, so let's see if I would have been long right here. Let's I'm anticipating that this is gonna be a market maker bomb model. Long right here. The majority of the position off at right there, and stop loss I'll break even. Because I wanna get to the point where I'm able to be part of market maker models and not just sell my whole position in here. Because that's what if I would have been on a trade like this, I would have been gone. It's not even 10 a.m. I would have been long gone. From exceptions to terminus, that's it. I don't. That's it. Which is there's nothing wrong with that. But I want to get a little bit outside of my comfort zone, so maybe taking the majority of the position off right there, and then letting some run. But again, I'm not feeling it like going to all the way up here. It could any time of the day, but we can definitely have another run and then maybe go higher one more time. Yeah, to me it looked like, yeah, was that's what I just, yeah, I wasn't feeling it at all. I wasn't feeling it at all, just going higher. And I don't know, yeah, I don't know where that feeling comes from, but it comes. I mean, from the market experience, I guess, but it's crazy not feeling something. Ooh, the big G. So if we create a gap and here this becomes the silver bullet, 10 a.m. just open. We don't want to see price go above this high at all. If price trades into it right here, now go above this high. And that looks good. That looks good as from going here, short stop loss right here, targeting this social liquidity pool, or even just going short instead of the this down close candle, the one where we tapped into it, because this could easily be a breakaway gap. That can be your short entry, stop loss right here, targeting all the way up here, and allowing price to get into the SIBI. But if you put yourself inside of this consecutive down close candles, then you don't have to worry about price getting in here. But if you wait for it, that's a better entry. We have a high, a low, higher high, low. This right here, going anywhere inside of this, it's good. Anywhere inside here. And this stop loss is safe because price should not go here, because it's literally outside of the breaker. So it's better if this stays open to have a nice run. And this SIBI is also aligned with consequent mean threshold of the breaker. So this right here, we see price not going inside of it. That is better than actually going inside of it. That shows more weakness. The price they ain't even trying to get into it. It's in a rush to get somewhere. Add in. Ah, amazing. This information is good. Oh, this is not real, bro. So all of this stuff right here, we don't want to see this hat. Like all of this is problematic. We see like bullish PDRA support and price. So if I would have been on this trade, stop losses right here, the chances of me getting stopped out right here are increasing. Looking at midpoint of that wick. You know, one of the things about like signs like this is just I just rather get stopped out than getting out of the trade. Let's say if I would have been on the trade and I'm getting out because probably we're gonna get stopped out. Nah, just stop me out, bro. Because I see from time to time getting close to the stop loss and then just going straight to terminus, and that makes me boil like this right now. See, this is what I'm talking about. So if I would have been on this trade, my stop loss would be moved from this high to this high. No need if we're gonna go lower for price to go above this high. Like no need at all. And I could easily just add more into this position instead of this inversion right here. Stop loss right here. Generated sell liquidity. Yo, am I just yo, am I just calling out the market? Hold on, I need to stop. Yo, I need to stop. Yo, today, yo, I need to stop. Hold on. I need to chill out. Next you know, it's gonna be someone knocking on my door. All right, come in, little boy. Yeah, I need to chill out. All right, after this liquidity pool gets taken, I'm gonna close the stream. Oh my god. If it does get taken though, you know. Thank you, ACT. Thank you, ACT, for everything. The mentor of your fucking mentor, man. Oh man, man, man. I'm gonna get so fucking good at this.